Hello and welcome. In this video, we will look at the World Gold Council's third quarter gold demand trends report. The executive summary states that Q3 was a subdued quarter for the gold market. The data bears this out. Gold demand eased down by 2% and the gold price was relatively stable. Quarterly volatility in the US dollar gold price was among the lowest levels seen over the past 2 decades. This was both a cause and effect of the benign gold environment." Unquote. Looking at overall demand, total gold demand in the third quarter was about 930 tons. This is the second quarter in a row that gold demand has declined. Furthermore, because total demand in the fourth quarter of 2013 was revised higher, total gold demand for the last quarter was at a 5-year low. Net investment demand declined the last 2 quarters, but was 6% higher than in Q3 2013. Real investment declined, and the increase over Q3 2013 came from a decline in outflows from ETFs. In other words, the demand for gold investment declined 67 tons in Q3 2014 over Q3 2013. But in 2014, ETFs sold off 79 less tons of gold than they did in 2013, so that is a net positive. Total coin and bar investment in the third quarter was down 21% from the third quarter in 2013 and was down over 7% from last quarter. The last 2 quarters were the lowest quarters for gold and bar investment in about 5 years. Overall jewelry demand was down year to date over 2013, but demand in 2013 was exceptionally high, and jewelry demand in 2014 so far has actually been pretty consistent to demand in the 3 years prior to 2013. Most countries actually decreased their jewelry demand, with China showing the largest decline, but there was a large increase in jewelry demand in India and the UK. Technology demand in the third quarter totaled about 98 tons, 5% lower than the same period in 2013. Electronics, dental, and all other industrial demand all declined about 5%. Total technology demand is currently about 10% of total gold demand. And overall, technology gold demand has been on a slight decline as some applications have found cheaper substitutions. Supply from mining increased for the second quarter in a row and was over 800 tons for only the third time in history, and all 3 of those quarters were in 2013 and 2014. Supply was down 7% from Q3 2013, but that quarter was the all-time high for supply. Although overall supply has been increasing and is at record high levels, that increase is expected to level off over the next year. Supply from scrap was pretty much unchanged from the last quarter, however it has been on an overall decline from the drop in gold price. The one bright spot in the report, which quite possibly trumps all other information in the long term, is that central banks once again added to their gold reserves at a consistent level. Total central bank demand for the quarter was a little less than 93 tons. While this is a decline from last quarter and from Q3 of 2013, total central bank demand for the first 3 quarters of 2014 has increased by more than 3% over the same period in 2013. The main central banks adding to the position were once again Russia and Kazakhstan. The demand of 93 tons of gold from central banks was almost exactly 10% of total gold demand, once again showing consistent gold demand from central banks as they have done now quarter after quarter. So that is the third quarter gold demands trend report from the World Gold Council. I hope that you enjoyed this video. Thanks for watching.